ladies and gentlemen, I hope you're having a wonderful morning. It is May 13th, 2025, and we are about 10 minutes away from the CPI data. Now, we talked about it yesterday. There probably won't be too big of a reaction unless everybody gets distracted by it. Everybody gets distracted. But yeah, the whole point is today is going to be a big event for hard data. We are looking for a lot of signals in the hard data, but that may take a couple of months to materialize, but still a data event. But other than that, we have a lot of headlines this morning. Trump is in Saudi Arabia. We're hearing about those deals. We heard about chips in Saudi Arabia. Boeing lifted one of the bans on, China lifted one of the bans on Boeing. And then we're even getting comments right now from Germany saying that they will be speaking with Trump soon. So we'll see where it all plays out, but we have a lot in store. You are at an almost bull market, and everybody is questioning what happens next, but this data and everything else should add a little bit to the storyline. So, Chad, yes, we are very early. I hope you guys are ready for that, but I did this last time. It's kind of informal. I'm like still getting ready for the morning. So I'm still doing the news. I might have to go poop again, but we do have the data in about 10 minutes. So if you don't know so far, here is everything and what we are pricing in and expecting. It's about 0.2 on the month over month, which is kind of high for core. So people are expecting things to go up. Remember, oil has brought things down as well as like real estate and a couple of other things, and then kind of came back up. But generally, I mean, inflation trends have been good. I mean, again, the biggest worry you've had to deal with is your imagination, not necessarily the hard data. So we'll see where that all plays out. But like I'm saying, unless everybody's distracted, I don't think today is going to move us too much. And we're already moving a little bit from all of the announcements overnight. So we'll see where this all leads in, but give me a second. I'll play this while I'm
in the super cycle, given
ready.
some of the technological advancements happening elsewhere.
Let me see if I can get analyst comments, and then if not,
Tim Cook
or
Apple
wait
for
9
matter.
minutes.
CPI drops in about 9 minutes' time. Joining us now, jumping on, Mike McKee with a preview. Mike, tell us what we can expect in a few minutes' time.
Well, we're not, John, expecting a huge change in CPI, an increase in the headline and an increase in the core of 0.3%, but that won't change the year-over-year numbers, 2.4% headline and 2.8% for the core. The real question is, where do we see, or do we see even, some tariff-related increases? You can look at furniture, you can look at electronics, things we get from Asia. Automobiles, did new car prices go up because everybody was trying to buy them, or used car prices because there was a shortage of new cars? So a lot in there to watch for. I thought the most interesting comment today came from the folks at Morning Money over at Politico, who said the Trump administration is the not yet administration. Prices are going to go up.
That's like at least 30 grand.
The economy is going to slow.
You bought a new car because you were scared?
We're sort of at the end of the not yets. We might start to see some of this start to happen.
Mike, you've seen all the updates coming from Wall Street, the new calls for the first Fed cut, all pushed back. We heard it from Barclays, from Citi, from JP Morgan, from Goldman Sachs. Mike, what do you make of the Fed debate following the truce between US and China over the weekend?
I think the Fed doesn't change its mind at all because, first of all, we still have tariffs of 30% on China and a 10% universal tariff around the world. And this is Donald Trump. He could change his mind again any time. So the Fed is still on hold and going to stay on hold for a while.
To that point, Mike, yesterday we heard from Chicago Fed President Austin Goolsbee in the New York Times saying it is definitely less impactful and stagflationary than it would have been. However, it's 3 to 5 times higher than what it was before. He's talking about the tariff rates. So it is going to have a stagflationary impulse in the economy. Fed Governor Adriana Kugler having a similar type of tone. Mike, is your sense that most of the members from the Fed speak that we have heard and the Fed speak that you are going to engage with, that they're really emphasizing the stagflationary kind of bent to the data and the fact that inflation is going to take probably the bigger emphasis in the near term?
Well, it probably will in the near term unless we have some sort of dramatic slowdown. The odds of that seem to have backed off a little bit. But if you get the kind of inflation they're anticipating, you will have a bump up. The question is, how long does that last? The idea is that tariffs are a one-time increase in the price level, and the Fed can look through that. But if this is going to be an ongoing cycle of tariffs on, tariffs off, then they have
Boeing looking to make Saudi part of the F-15 supply chain.
With the latest, Mike, stay close.
That
Mike,
is
will break
coming
the
out
data in
now.
about
Again,
6
there's good
minutes' time.
Boeing news as
CPI
well.
is just around the corner. The estimate in our survey for headline CPI month over month is 0.3%. Stripping out food and energy core month over month, looking for that to come in at 0.3% for the month of April. The previous month, that reading was 0.1%. You mentioned the governor, Adriana Kugler. The tariffs appear likely to generate significant economic effects, even if tariffs stay close to the currently announced levels. They are staying the course, aren't they? Steady hand.
At this point, if they flipped as frequently as some of the policy proposals did, they would be accused of reacting quickly at a time when policy is uncertain and it takes a long time to get to the economy.
All right, we got 5 minutes.
If they don't give some sort of guide, then there's a question of what forward policy and the sort of tool that they have, given that communication has been so instrumental for them, about what kind of value that has if they're just saying wait and see over and over again. So they're between a rock and a hard place. Key question that I have is how quickly
yeah, UNH, the CEO stepped down for personal reasons, and then they suspended guidance.
That people can rely on, and that's going to be increasingly difficult to tell.
It kind of sucks. Again, UNH was like the leader.
That's the good news for them.
They've now turned
a lot of
into
people
the
on Wall Street do not have that luxury, which is why we
turned
see
into
them marking to market or marking to trade
kind
negotiations.
of. It's already looking attractive, but not if they lose the leadership. You know, every time everybody's asking me what's the difference between UNH and Humana, UNH just does way better. I mean, Humana does have a limited segment, but yeah, it is.
Upgrading their expectation
if they start dying, kill guidance, underperform, you don't want them to turn into that. But it is a great price. Again, you're going now just like Humana. You're going back about 3-4 years in time.
Something that we're not going to get clarity on in 5 minutes' time, but we're going to try.
So I think it's good, but I think it's a little bit more risky now.
Around 0.4 percentage point additional GDP growth this year, and potentially a little boost to next year too of 0.2. So that's the direction of travel. Up next, CPI data and reaction from Tiffany Wilding of PIMCO, David Kelly of JP Morgan Asset Management.
JP Morgan Asset Management. Thank you. Thank you. Plant. All right. So again, we're live already. We're getting ready for it. I do have some analyst comments. I'm getting your morning news ready to go right now. But again, I don't think this will be too crazy. So let's see what we have. Oh, I already got a lot. All right. So median estimate expected to be 0.3 on headline, 0.3 on core, year over year, 2.4 on headline, 2.8 on core CPI. Let's see. Flag downside risk to April CPI with predictions flat month over month. Headline rate of 0.1. A model for the Cleveland Fed is closer to consensus, but sees inflation coming in cooler at 0.2. Even after last week's big tariff reprieve, analysis by the Yale Budget Lab reckons consumers continue to face an overall average effective tariff rate of 17.8, the highest since 1934. The volatility of Trump's admin announcements make it hard to get a clean read on how tariffs are impacting the economy. As Enda says, April CPI may reflect some of the tariff hikes that President Donald Trump has been putting into effect. April saw the big ramp up in levies on China, most of which have now come down after this weekend's negotiations, as well as the 10% universal baseline. One area where we might see price relief is travel, according to Michael Ferroli at JP Morgan. There are signs that travel purchases, especially from international, have cooled, and that could be putting downward pressure on travel-related CPI. Tariff effect is beginning to resurface. U.S. collected record amount of revenue. It would take a significant surprise to really move the Federal Reserve debate. Tariff policies in flux. The Republican tax legislation is also taking shape. We're pricing in 2 quarter-point cuts. George Congalve's rate team at MUFG says that given a more encouraging backdrop for trade negotiations, there's a case that markets would be pleased even if the April print comes in slightly hotter, as it will be unlikely the market goes into pricing fewer cuts. So, yeah, I could kind of agree with that. Like I'm saying, I don't think today should have too big of a move unless it's extremely hot and people freak out. But other than that, even if it comes in a little hotter, I don't know if people will vomit up this move that we just had. There's political implications. Who's this? Bessent said at the House last week, claiming that the admin's agenda was bearing fruit in data prints, including the March CPI. So last time Bessent talked, he said CPI for energy declined in March, as did core goods, and the CPI of all items declined for the first time since COVID. Back in February, Bessent argued that we're still living through Biden inflation by claiming some credit for the tame March CPI. He might have left himself open if we get a pop in prices for April. Interesting. So we got 1 minute, but I do remember that. Last time Bessent talked, it was after the, in between the data sets, and he was hyping it up. So either he knows or now people are going to talk shit. So Chadadonia, get ready. Again, you still have Boeing, China, Saudi news, and a lot of other things. So, once we kind of get over this, before you know it, you're going to be quickly getting ready for the other part of the day. So keep that in mind. What is this? 4 Chinese rare earth magnet suppliers have been granted export permits. Volkswagen confirms a limited number of suppliers have received licenses. Reuters. That's coming in now. All right, 15 seconds. You guys got the wire. Again, we're looking for like a 0.2, 0.3 number. Anything hotter would be bad, but other than that, should anything lower, I think people might love it. Remember, core CPI was negative last time. 3, 2, 1. Oh, we're off. Hi! Oh, -1. Oh, wow. Average weekly earnings. Whoa. April energy went up, but core CPI 0.2. Yeah, that's beautiful, actually. Damn. Headline 2.3? So, yeah, I think even headline went lower. No fucking way. Yeah. Bro, that's the lowest headline print you've had in years. I'm telling you, I don't remember the last time you had a 2.3. So, yeah, you're getting closer to the Fed's target. Core came in line, but... like I'm saying, the month over the month came in a little bit hotter, but still below expectations. Could have came in at 0.3, came in at 0.2. So now, again, if anything, you might get the good effect, but yeah, it was good. That was it. So now you burn through that data, and now whatever you get from Saudis, China, everything else, but that'll, again, you were already up. So this will just probably take you above the FOMO zone, and then we'll see how long this actually holds. So get ready, though. Remember, usually the first move, if it doesn't really melt up in the next, 30 minutes, bro, it's just going to kind of do its thing. All right. A smaller increase in both headline. Yeah, bro, that's beautiful. Well, wow. Refresh it. So we're going to FOMO? Yeah, well, we were already at the level. Remember, yesterday we closed literally at 58.45, the price I told you to watch 2 weeks in advance. So anything above it, the FOMO really starts. I think it's going to be choppy. And then, like we talked about last night, hard data and the big, beautiful bill. Those are going to be your 2 things now that could move us. And then we got a little bit of time. You got about 30 days. I love it. I love it because I hope you guys see that every day it goes up, people start debating even the bear market rally. You guys are literally watching in real time. People go from so scared to buy the market to, oh my gosh, I have to buy it, even if it's not a good deal. And then if it goes, oh, it's going to be amazing. So head on a swivel, guys. Head on a swivel. I think we have a lot more in store. But for now, this is the moment. Again, he is risen. Do you guys remember that? He is risen, indeed. Gus, tell him, bro. I've been trying to literally, ever since Easter, this is part of the He is Risen rally now. So, like I'm saying, just depending on how long it lasts, we'll go from there. But you still have time. Eventually it'll chill, but, you're riding the way up. So, other than that, Chadadonia, actually, can I? No, I don't think it'll let me. Yeah, they won't let me buy stuff pre-market, huh? Because I had a play I wanted. Let me see. But they usually scam it right out the bell anyway, so I'll just wait. But other than that, let's play a little bit. Let me get this news, and then Yeah, we'll be good to start the morning, baby. Good morning.
Prices hasn't hit yet. Then you go on and take a look at things like toys. Toys were up 0.3% after falling 0.9 last month. Let's see if that's any kind of a harbinger going forward. We mentioned rent of shelter and owner's equivalent rent. They were not a major contributor this time, or rather they were more, I'm sorry, 0.4% for owner's equivalent rent. And then the motor vehicle insurance, which has moved up a lot, up 0.6 again. Video and audio services down 0.6. There was a thought that might be something that would rise because of tariffs. And airfares were down on the month. That was also something that people were watching to see what we would get in terms of people not wanting to come to visit the United States. But right now, we are seeing a decline there. Airline fares off by 2.8%, and that helped keep inflation down, even though it may reflect tariffs and the general feeling about the United States.
Mike, thanks for the breakdown. We'll come back to you in a few minutes' time. Mike McKee there with CPI. So the shorter version of all of that is that we got a downside surprise on CPI, 0.2% against an estimate of 0.3, both on headline and on core, month over month, and that unlocks some gains in the equity market, just briefly up by a few tenths of 1% on the S&P 500. That's the equity story. In the bond market, unlocking some lower yields. On a 2-year, down by 3 basis points. On a 10-year, we're down by about 2 or 3 basis points as well. The 10-year, 4.45. Joining us now to discuss, Tiffany Welding of PIMCO. Tiffany, welcome to the programme. We were told to ignore some of the data throughout this morning. Can we ignore this data?
Well, yeah, I mean, I think there is a lot. It sounds like there's a lot going on under the hood. But the overall message is that, the U.S. economy prior to any sort of tariff pass-through was just on a continued path towards normalization after the pandemic-related shocks. Inflation was elevated. It's remained elevated. And I think overall this report, suggests that some of that is coming down. And if it weren't for tariffs, the outlook would be towards more moderation. But I do think you have to discount this a little bit because we know eventually the tariff costs, which are major, will be passed through to some extent. Now maybe one more point on that is I think the interesting thing is that we're hearing from some of these larger retailers, as they are trying to hold the line on prices, it seems like as long as they can to increase market share. They had the ability to front run this by importing a lot of inventory ahead of time, so they might have a bit more of a window before they really need to raise prices.
Yeah, so now first rate cut priced into September,
under the hood,
and then second cut priced into October.
Whether some of the
about 2 weeks ago, we were pricing in July.
The smallest increase since February of
2021
are sticky.
So yeah, you guys are calling it out very accurately. Is that part of the FOMO? You might be going up, but at this pace, like I told you, about 2 days, a couple more days, the bonds will be at the danger zone, and then we're going to do that all over again.
Yeah, well, certainly we've seen a fall in gasoline prices. I think the interesting thing is if you look at U.S. gasoline and other U.S. energy prices, they have not fallen as much as global oil. So I think it'll be maybe a little bit less disinflationary, than if you're just looking at oil prices. But you will get some benefit from that. I think on the housing side, I think there's real questions here. The tariffs clearly will raise housing costs. The things that we import in terms of appliances, and other inputs into to building homes. Most of that comes from China, and so that will cost more. And eventually that will filter through into higher rental prices. Now I think near term against that, we found evidence that the increased flow of migrants into the United States, did raise rentals in sort of the lower, smaller rental apartments and things like that. And we think that's why you saw OER, moderate, come down, inflation come down there much slower than many people were expecting, is because you had this offsetting inflow. Now, obviously, that force is
bear market
waning
rally
and
or back
potentially
to Are
even
you like
reversing,
trolling
so
me,
that could result in,
or do you
in some
just like not
faster,
listen when I answer?
deceleration
I'm
near
asking
term,
seriously.
in
I mean,
some
like
rental
genuinely.
Costs, but I think ultimately the
Because like I think a
longer-term
lot of
outlook there
people
is for
are bringing this up
housing,
sarcastically,
costs as a result of some of these
and
tariffs.
again, I think I gave you guys accurate info ahead of time,
get all
and I
these
think
counter
it led
forces
you into
together,
it.
whether it's
so
the immigration story,
I don't want
whether
to
it's
deal
the
with
terror
this
story,
shit
whether it's what the
because
economy
I just
was
explained
all
it,
of this.
and I think
He also
at
asked
some
me,
point
and I
it
had
is
no answer about when the data would be
you
clean,
guys
when we
got to
would
get
get
with
actually
it or not,
something that
but
we
I'm
could
not
rely
going
on.
to.
So I will ask you, at what
don't
point
play
do
me,
you
bro.
think that you
Don't
can
play me.
see sort
Okay?
of the new normal
Do you understand?
in the
Don't
data,
play me.
or is
I'm
that
being nice
not
right
really
now.
going to come back?
But
Are we going to have to
you guys
watch
need to lock
these
in,
trends
pay
sort
attention
of
to it.
in parallel
I'm not
fashion
going to keep
and try to
explaining
compile
this
a
one.
picture?
And if you get caught up in the lack of clarity
I
with
think
it,
that the
it's
new
going to hurt you.
normal is,
So I think it's a very easy
we're
one.
quite a ways
Stop
away
listening
from
to
that.
people.
I
Don't
think
trust
the bottom
people.
line here is
Literally
just
2 weeks
that
ago,
taking a
nobody
step
wanted to
back
buy it.
from the
So why would
headlines and
anything
things like
be
that,
different
the
right
average
now?
effective tariff rate that
So
we
we're still in a bear market rally,
calculate
44
as a
days.
result of these
No, you're
trade
good. I don't know. Like I'm
policies
saying though,
has
it's
increased
just
more
I
than
don't.
any time
After
in the
I've
century.
explained it in
That
depth,
is a
and then
dramatic
to ask
economic
that 20
shock.
seconds later,
And it
I don't
will
know if
take
you're trying to
time
fuck
for
with
that
other
to flow
Chads.
through
So if you're
the
not trying to
system,
fuck with other Chads,
and you know,
I would
we
lock
aren't
in,
going to see the
please.
quote unquote new
So
normal
thank
on
you.
the back of that. We think for quite some time. You know, when I say quite some time, you know, maybe a year or
FOMO
more
is
for
kicking
the
in.
economy
But
really
that's what
to
I'm saying,
adjust,
though.
assuming
Like,
these
I think
tariffs
other
stay in
people are
place.
trying to
So,
fuck with
I
you
guess
guys.
to settle in.
That's why people are like, is it
and
bear
let's
market
see what
rat?
happens.
They're saying
Do you
it with a
think you
very,
have a best
and that's what I'm
guess
saying.
right
I don't know what
now?
homie
Any kind
meant
of
by
guess,
it, but
any
I'm
kind
like,
of
are you
take
being
whatsoever
sarcastic?
on the
Because
nature of that
people are
shock?
giving you
Tiffany,
shit for
I get
it.
that it's a policy
And like
shock,
I said, I don't.
but is it
Yesterday,
an inflationary
we
shock,
bought the
a
dip
disinflationary
perfectly.
shock,
So
a
even if
growth
it's
shock,
not
a
a
negative
bear market
supply
rally,
shock? What
I
kind of
bought the
shock
dip,
is it?
asshole. We don't care, and our long terms at
Well,
all-time
I
highs.
think it
But
acts like
even
all
then,
of those that you mentioned,
I wouldn't bet on
you know, and I
don't.
think
If
the
your
bottom line
strategy
is because
relies
we
on bear
haven't
market
seen
rally or not, you're
the
going to be
type
fucked. You're already
of
emotional.
policy
But
like
at the end of
this
the
in
day,
quite some time,
we saw this rally in
we
advance.
don't exactly know
It's
how
it's
it's
here
gonna
right
filter
now.
through,
The
into
clock
the
started
economy.
for
You know,
44
again,
days.
we have a best guess
Let's
about
see
that,
what happens
which is that we
after
think
that.
you
But
will get
generally,
some price
I
level
would still
adjustment
call
that
this
occurs,
a bear market rally,
because
and that
firms
has
have
not
to pass
changed.
on the additional costs of tariffs, and they will do so eventually. That will result in a real income squeeze because you don't see wages adjust as quickly. We ultimately think over time wages could adjust, but during that real income squeeze, that just means that real consumption, is hit by that, and there's some knock-on and second-round effects from that. As volumes start to decline because prices are higher, then that just means you potentially need to hire less people. You'll probably get some margin squeeze. It could be detrimental to investment trends in the United States.
I forgot about that.
I think the magnitude of these things and how they play out over what time frame, I guess is really the question here. And then how inflation expectations adapt to all of this. I think the real concern from the Federal Reserve, for example, is that we've come off of a period of elevated inflation, and having another shock that should be a one-off sort of temporary thing can result in inflation expectations drifting higher, can start to creep into wage negotiations, and can result in more persistent inflation. I think that's what the Fed is concerned about.
Tiffany, appreciate your take as always. Tiffany Welding there of PIMCO. Speaking of inflation expectations, you, Mitch.
That's crazy. Her and Janet Yellen are co-workers.
Another read on that on Friday. If you are just joining us, welcome to the program. Moments ago, CPI, small downside surprise year over year, 2.8%, the smallest increase since February 2021. Mike McKee, how much comfort can we take from the smallest increase since 2021?
I don't think economists will take a whole lot of comfort for the same reasons that Tiffany was talking about, the fact that we don't know yet where all this is going to show up, but we do expect something to show up. It'll be interesting on Friday to see how this CPI report and the news of what's gone on with China plays into that University of Michigan number, because people have been very depressed about the outlook. Do they feel better, and then do they bring down their inflation expectations? I do want to mention two bits of inflation numbers that the president has harped on. One is energy. He said it's come down. It didn't. It went up 0.7. He should have mentioned gasoline, because gasoline is what was down 0.1%.
Okay.
Natural gas up 3.7% on the month. So energy's still up. However, food prices, as he suggested, have gone down during the month.
Yeah, energy's still up.
And eggs down 12.7%. So the president gets a win there, yeah.
The poster child of the inflation story of the last few months. Mike, thank you. Eggs are down. I think it's fair to say that when the president's talking about energy, he's talking almost exclusively about gasoline.
That is what's going to make an impact on people who go to the pump, which is a reason why he cited something below $2 a barrel that people have been looking for. But there is this question of how much that will actually give a tailwind to the real incomes of a lot of people, and how much that's actually going to bring headline inflation pretty much where it is or a little
Dead on
bit
the money.
lower.
The confidence story, the psychological impact of seeing that framing, it's really, really important. David Kelly of JP Morgan Asset Management joins us now to build on some of this. David, welcome to the programme, sir. What's your initial reaction to these numbers this morning? How useful are they?
Well, you know,
All right,
usually
bro.
when
I need to get it
on this call on CPI day, it's like the biggest news of the week.
I think we're good. I got the plays.
Today,
I got the
obviously, it's
news.
the tariff news.
Josh AI
But
ready to
also, I
go.
think the other big
I
part
got
of the
15
inflation story
minutes.
going forward.
That's it. I got to
is the
do
fiscal
fake jump
stimulus that's
ropes. I
beginning
got to
to
move
emerge
around a
on
little.
Capitol Hill.
That's it.
Because what it looks like is,
Y'all should
okay,
move around
the
too.
tariffs aren't here, and consumers are relatively quiescent right now. I mean, we're not seeing a lot of enthusiasm there with airline fares and so forth down. But it looks like they're cooking into this bill stimulus for 25, 26, 27, and 28. They're implementing a lot of the president's promises on the campaign trail in addition to extending the tax cuts. And if that comes through, you're going to have a surge in consumer spending in 2026, helped by fiscal stimulus, and perhaps even later in 2025. That'll keep inflation a little higher. So this is good news in inflation, but I think the signs are that inflation is going to move up in the short run because of tariffs, and then in 2026 because of renewed fiscal stimulus.
David, is that a reason to be bullish the equity market?
Probably not. You know, I mean, the equity market is hard. I don't know exactly where we are right now, but it's hardly down year to date. And I mean, we've done a sort of a round trip on tariffs here, but we still end up with a higher tariff rate than we had at the start. I think we've got slower long-term economic growth. So in some ways, the relief rally has been stronger than the downturn. And I think it may be a little bit overdone. So I'd still caution people, you know, longer term, the huge premium that U.S. equity prices have over the rest of the world probably isn't justified. And so I'd still be in the diversification camp here.
I think I'm playing around.
I do think
I left it unmuted.
10-year Treasury yield of 450 to 5 is probably more reasonable than a big fall from here. But I think it's too early to be really bullish about equities because of fiscal stimulus. Because
why can't they take it as a win?
We're talking about a full employment
because they're all under
where
position.
The Fed's going to have less reason to cut.
We've been struggling all morning with whether this really is the beginning of the return to the United States, the dialing back of some of the loss of U.S. exceptionalism types of narratives, or whether this is just a pause in the go international trade. David, you talk about diversifying. What does that mean if you think that the 10-year yields are going to be in a 450 to 5 range and you don't really find U.S. equities particularly attractive right now?
Right ahead of even the China deal.
International equities. I mean, yes, the U.S. equity market has almost done a round trip year to date, but European equities up very strongly.
Had one of the biggest
delevering
of futures
strongly for the year, and the dollar is down. I think that will continue because we will still end up with significant tariffs at the end of all of this, even though we're seeing it's calming down. We're going to end up with higher deficits. We're going to end up with lower immigration, probably lower economic growth. So I know, this is a package, an agenda that the public has voted for, and that's why we have elections. But it does suggest a slower trajectory in U.S. economic growth with higher deficits, somewhat higher inflation in the short to medium term. None of that is really very pro-U.S. And the thing is, I think the U.S. will do okay. But does it deserve to be, a 50% premium over the rest of the world in terms of PE ratio? So I'd say international equities, yes, and then also alternatives. If fixed income is not going to help you because of
have you guys noticed you gave up? There
are plenty of alternatives.
You gave up a month of gains on the euro
which have
in like 3 days.
Protection. So I think people just need to broaden their definition.
So remember that euro trade and the death of the dollar.
You mentioned the Fed's response, and this has been a subject of a pretty heated debate. Frankly, it feels like people are bifurcated on just whether this gives the Fed more incentive to cut rates just for the good reasons or less incentive. From your perspective, is this more of a reduction in potential inflation in terms of the lower tariff rate than it could have been that gives the Fed more of an ability to cut rates without a recession at a time where the data that we just saw, albeit messy, does point to something of a much lower pace of price increases?
Well, yes, but the Fed's target is 2. And I think that on the consumption deflation, I think Jay Powell put it pretty well at his latest press conference. They're going to have to look at where they think inflation's going and where they think unemployment is going. And I think the both fiscal stimulus that is beginning to emerge from Capitol Hill and then also somewhat lower tariffs, they suggest that the risk of recession is receding here. I think it's probably just gone below 50%. So risk of recession receding, maybe the unemployment rate ends the year 4.5% to 5%, but the CPI the consumption inflation could easily end the year above 3%. In fact, it probably will. So we're probably going to be further from the consumption deflation target than from the unemployment target. In that kind of environment, there's not much excuse for the Fed to cut at all, because we're at fairly close to a neutral level. So I think the Fed will take it very easy here, and it's part of the story is tariffs, but the other part is putting more fiscal stimulus and higher deficits into 2026 really doesn't give the Federal Reserve a reason to be easy.
Is your base case no cuts now, David?
No, not quite. I think we will get at least one cut this year by the end of the year. I think the Fed realizes they can edge rates down a little bit, but I don't expect a cut in June. I don't expect a cut in July, to be honest. I think they'll want to see much more of much more certainty around what the tariff picture really is and how much stimulus is in this bill before they contemplate any cut. So I think we're going to have to wait some time for the first rate cut.
Interesting. David Kelly there of JP Morgan. David, good to see you, sir, as always. My takeaway from that conversation is how the attention has shifted very quickly from trade to taxes.
And this might not be a picture that is as simple for the bond market. The idea of who is the bigger potential pushback from some of the proposals. Is it going to be other Republicans, or is it going to be the bond market? And a lot of people, and that was Peter Scheer's words, I'm copying them, but a lot of people are waiting for that ramification.
I think they were my words, actually, Bramo.
I apologize. Okay, please. They're Jonathan Farr's words. They're fantastic words.
Let's put that on the record. Very special, important words. 2-year yields are down by a few basis points this morning, down 4 on a 2-year. On a 10-year, we're down by about 2 basis points to 445. Let's give you an update on stories elsewhere this morning. Here's your Bloomberg brief with Yahara. Hey, Yahara.
Hi, John. We start by recapping the latest economic data. U.S. consumer prices rose less than forecast in April. Core CPI rose 0.2% from March, lower than the expected rise of 0.3%. The data suggests inflationary pressures are limited, but remain at risk of building as companies look to pass on the cost of higher tariffs. Meanwhile, the U.S. is projected to lose $12.5 billion in travel revenue this year. The World Travel and Tourism Council telling Bloomberg visitor spending is estimated to fall 7% versus a year ago. The decline in tourism is attributed to a strong dollar, some lingering COVID-era travel requirements, and a negative view on President Trump's America First rhetoric. And Apple wants you to be able to control your device with your thoughts. According to the Wall Street Journal, the company is taking early steps to allow people to interact with their iPhones with neural signals captured by brain implants. Apple has worked with Synchron, which makes a stent-like device implanted in the brain's motor cortex and is able to read brain signals. That's your Bloomberg brief. John?
Nope. Yahara, thank you. Appreciate it.
I knew you were going to say that.
Honestly, some of the technology out there these days. This could be used in really great ways, by the way. And we've talked about it with regards to Elon Musk, people with disabilities. This could be absolutely fantastic. For everyone else, this is just going too far, isn't it?
Sure. If you've had a stroke and you want to be able to communicate in a way that you can, fantastic. We highly support. There's this question about if they don't have our brains enough in the scroll features and the suggested headline features, they need to actually take control of our brains. I mean, what more can we possibly do with this thing?
Manipulate it and all of that stuff. No, want nothing to do with that. And then sell you ads. And OK. Up next, we'll set you up for the day ahead from New York City. This is Bloomberg.
Change your life today. Start investing now and give all of your money to somebody who only cares about a commission. Do you feel left behind? Does our reporting give you mass anxiety, feeling like you need to take irresponsible financial decisions? Call our financial advisors today, and we'll make you feel like one of them. And then you'll fit in, and then you will be broke because we took all of your gains through our fees. Bloomberg. What? What up, baby? Low CPI, back in the day, that used to help out the bonds. Now it just kills them. But Chad, the rally continues. Up until the bonds freaks everybody out. We're going to hear a little bit today about Saudi Arabia and chips and a lot of other things. But When it's all said and done, baby, we have an exciting one ahead. And shout out to the long term in Chatadonia. Good morning. What's up, man? We're going to start a little early, bro. We got the data. We got the news. The Chads are here. What up, Tyree? What up, Ansel? Frankie, Malcolm, Tyler, Awad, Kurt McGirt, baby. Good morning, Zuraj. Good morning, Legal, Dystopian, Gus Gonzo. I got King Kong in the trunk. Howdy. Howdy, baby. What up, PNC? What up, Amir? What up, John Michael? Me, Nacho, Mark J, baby. Alan, BK, Laker, J. Good morning, El Presidente, El Trapado, Rami, Mark. Good morning. Are you ready? What up, Mr. McAllister? What about that Twitch? Razzle Dazzle, 12 Jimin, Liberace, El Coyote, Wild Boy, Epic Eric, Feed Me Seymour, T-Sway, and Wild Boy, Frio Fried Rice, and Blazing Bob. We usually got, but it's early. It's early today. And yeah, we got the Twitch. It crashed my computer again, though. Bro, I even changed like System 32 settings, and I thought I fixed it, and then this morning it crashed my computer again. But I figured out a way for now. It's good for now, baby. But good morning, Twitch. Good morning. We're back today. We are back, but you're going to have a wild day again. Everything from chips to Boeing to China to Saudi Arabia, maybe even a little bit of Germany. But other than that, the CPI good. See what happens with bonds and energy. And here is Josh AI with the news. I didn't put in the CPI data since we were live already. So good morning. U.S. stock futures drop before key inflation data. The Wall Street stocks rally headed for a pause as optimism around the temporary tariff cuts agreed between the U.S. and China gave way to lingering concern about inflation and economic growth. Futures pointed to a drop of 0.3% for the S&P 500 and a 0.2% decline for the NASDAQ 100. United Health Group Inc. sank 10% in pre-market trading after suspending its 2025 outlook. Appetite for safer assets picked up again, with treasury yields falling and gold prices on the rise. The dollar slipped. Investors are taking a breather after the 90-day tariff cool-off announced on Monday sent risk assets on a tear and propelled the NASDAQ back into a bull market. They'll be looking for clues on the trajectory of Federal Reserve interest rates in the U.S. inflation print due later in the day, the first to potentially show tariff-related costs. The challenges are not over, said Frederique Carrier, investment strategy head at RBC Wealth Management. The de-escalation was a lot stronger than even the best hopes, but you have to remember that the U.S. economy still faces average effective tariffs of more than 13%. An optimism over the U.S.-China detente saw the S&P 500 index close up 3.3% on Monday, higher than where it was when President Donald Trump announced sweeping Liberation Day tariffs on April 2nd. A surge in big tech shares put the NASDAQ 100 back into a bull market just about a month after it plunged 20% from a previous record high. Yesterday's move was warranted, said Andrea Gabellone, analyst at KBC Securities, but I need more to get more fundamentally constructive. The rebound prompted Mark Hayfell, Chief Investment Officer at UBS Global Wealth Management, to cut U.S. stocks to neutral from attractive, saying the risk-reward was now more balanced. Uncertainty is still high, he wrote in a note on Tuesday, and investors will focus on whether a lasting trade agreement can be forged between the two countries. Goldman Sachs Group Inc. strategists, led by David Kostin, lifted their 3-month target for the S&P 500 to 5,900 points. That's a gain of less than 1% from current levels, implying that the recent advance is set to stall. Dollar dip. The Bloomberg Dollar Spot Index slipped as much as 0.3% as positioning in the options market continued to lean against the currency. Christopher Kjaer-Lomholt, head of FX and corporate research at Danske Bank AS, said the greenback's 1% surge on Monday was all about the unwind of the post-Liberation Day trades. Treasuries also reversed some of the Monday moves. The policy-sensitive U.S. 2-year yield fell 3 basis points after surging 12 basis points amid speculation the tariff truce would bolster the world's biggest economy. Corporate highlights: Boeing shares rose 1% in pre-market trading China has removed a month-long ban on airlines taking delivery of the company's aircraft following the trade talks with the U.S. Pinterest fell 3.1% after a report that Google may unveil a feature next week that mimics Pinterest's core product, showing images designed to give people ideas for fashion and other types of designs. Bayer AG shares surged as much as 12% after its earnings beat expectations, with robust demand for its new cancer and kidney medicines helping offset a decline in agricultural sales. Fading euphoria, the rally that ripped through U.S. markets to start the week is already generating plenty of skepticism. Currency traders are pushing the dollar lower, unconvinced that its recent surge on the back of easing U.S.-China trade tensions will last long. Data from the options market show that dollar bearish bets this week total about $61 billion in notional value, more than the $55 billion in bullish trades. The dollar gained 1% on Monday, its biggest daily advance since the U.S. presidential election, after the U.S. and China agreed to temporarily lower trade tariffs. That fueled hopes the world's largest economy will avoid a recession and led traders to pair bets on interest rate cuts from the Federal Reserve. Trump faces $2 trillion hurdle to win money from Saudi prince. U.S. President Donald Trump's hopes of securing as much as $1 trillion in investment commitments from Saudi Arabia might clash with another costly ambition, transforming the kingdom's own economy. Saudi Crown Prince Mohammed bin Salman's plans to diversify the oil-dependent country are likely to cost close to $2 trillion, according to estimates compiled by Bloomberg News. The sheer scale of domestic commitments, calculated by Bloomberg based on interviews with people familiar with the plans, U.S. government projections, Saudi estimates, and data from the researcher Mead, are transforming the kingdom's role in the global economy. A GOP tax bill prioritizes Trump campaign vows, increases SALT. President Donald Trump's campaign tax pledges, no taxes on tips and overtime pay, plus new tax breaks for car buyers and seniors are the centerpiece of a multi-trillion-dollar package that will serve as Republicans' signature legislative effort. In a draft version of the tax bill released on Monday, House Republicans highlighted the president's populist priorities in a package that would enact those cuts through 2028. The bill would also make the lower individual tax rates Trump signed in 2017 permanent. The bill addressed a tax issue that has been dividing lawmakers since it was first restricted by Trump in 2017. The $10,000 cap on the state and local tax deduction. The plan raises the SALT limit to $30,000, but with limits for individuals earning more than $200,000 or couples making twice that. The proposal notably doesn't include a tax hike on the wealthiest Americans after weeks of debate among Republicans about whether to raise levies on millionaires. The bill would permanently extend the 37% top rate for individuals that was set in Trump's 2017 tax law. That's despite Trump telling House Speaker Mike Johnson as recently as last week that he wanted a 39.6% rate for individuals making more than $2.5 million. Our top overnight news is trade tariffs. Trump says he may speak to China's Xi, claims Beijing agreed to remove non-tariff barriers. Bloomberg SCMP. U.S.-China tariff de-escalation leaves some questions unanswered. Reuters. Besson expresses optimism. Bloomberg. 90-day reprieve prompts some U.S. companies to restart operations and begin shipping. Bloomberg. Politico. Shippers await volume rebound after U.S.-China tariff reprieve. Reuters. Beijing removes Boeing plane ban following breakthrough in U.S.-China trade talks. Bloomberg. U.S. tariff reprieve gives Shein and Temu time to bring in bulk shipments and restock U.S. warehouses. Reuters. Axios. He's seen as the winner from U.S.-China tariff de-escalation. Bloomberg. Axios. Chinese rare earth exporters are seeking clarification on whether they can sell to the U.S. Bloomberg. Trump sidelines EU as U.S. strikes trade deals with UK and China. Politico. Bessent downplays EU-U.S. trade deal hopes. Bloomberg. Trump's trade war could come to an abrupt halt this month as legal battles loom. Politico. India mulls counter duties on U.S. imports. Reuters. China and Brazil sign trade-related agreements as Lula touts strong relationship amid U.S. trade threats. Bloomberg. Markets. U.S.-China tariff cut fuels spurs Buy America rally. Bloomberg. FT. Reuters. New York Times. BOFA fund survey shows investors likely to chase the stock rally sparked by the U.S.-China trade truce. Bloomberg. Goldman Sachs upgrades S&P 500 price target, reduces U.S. recession odds following U.S.-China tariff cut. Bloomberg. China stocks retreat as tariff cut optimism gives way to thoughts policymakers less inclined to roll out new fiscal stimulus. Bloomberg. Economy. U.S. inflation forecast to have accelerated in April as tariffs went into effect. Bloomberg. Economists still see U.S. growth slowing despite U.S.-China tariff reprieve. Bloomberg. Zoo survey shows German investor morale brightens more than expected in May, while Reuters. UK retail sales surged to four-year high in April as Easter and sunshine lift spending despite trade war fears. Reuters. Australian consumer confidence steadies following election, but business sentiment negative. Bloomberg. Central banks, economists, and traders pair Fed rate cut expectations following U.S.-China tariff de-escalation. Bloomberg. Fed officials see tariff reprieve lowering risk to U.S. growth, though impacts on economy still likely to be significant. Reuters. BOJ summary of opinions indicate tariff effects too difficult to predict. Reuters. Bloomberg. ECB officials say central bank should be prepared to react quickly to changes in economic growth and inflation. Bloomberg. Market pricing in 3 RBA rate cuts in 2025 compared to at least 5 being priced in prior to U.S.-China tariff cut. Bloomberg. Corporate. Google developing software AI agent, Pinterest-like feature, The Information. Google faces 12 billion euros in damage claims from EU price comparison websites alleging customer theft. Bloomberg. Apple planning to use AI technology to prolong iPhone battery life. Bloomberg. Amazon hires FedEx to handle large package deliveries following UPS pullback. Reuters. Bayer beats earnings estimates as new cancer and kidney drugs offset agriculture weakness. Bloomberg. Washington GOP still facing deep divisions on Medicaid. SALT as reconciliation bill markups commence. The Hill. House tax bill calls for $30,000 SALT deduction limit. WSJ. Bloomberg. Trump fails to convince lawmakers to eliminate the so-called carried interest loophole in GOP tax bill. Politico. Bloomberg. Pharma industry faces nightmare scenario after Trump's latest action. Reuters. Axios. FT. Geopolitics. Trump gets some big wins in latest global diplomatic frenzy. Bloomberg. PM Modi calls India's reaction to Kashmir attacks the new normal. Bloomberg. Reuters. FT. Trump begins 4-day visit to Saudi Arabia, focusing on economic deals rather than regional security issues. WSJ. Trump is omitting Israel from his Middle East trip, raising concerns about alignment on regional policies. WSJ. Trump administration weighs allowing sale of AI chips to UAE firm that was scrutinized for its China ties. NY Times. Energy. OPEC plus production hikes signal Saudi acceptance that it cannot push prices higher amid cartel frictions. FT. FT. I had to get it unmuted. Good morning. There's more, my friends. There is more. So, S&P futures, they are flat on Tuesday morning off of the worst levels. Comes after U.S. equities rallied on Monday with the S&P up over 3% and up over 10 of the last 11 sessions. Big tech, apparel, transports most shorted among the best performers, while defensives like staples and utilities lagged. S&P now less than 5% below all-time highs from mid-February. Treasuries firmer after big bear flattening move on Monday. Dollar down by 0.3. Gold is up by 0.6 after losing 3.5 yesterday, and Bitcoin is up by 2, with oil up 1.2. Quiet from a headline perspective following a big Monday rally back on the more aggressive than expected U.S.-China trade de-escalation. Reprieve already helping to drive up a pickup in earnings growth and S&P target forecast. Also might de-risk the widely expected hard data catch down over the next couple of months. Legal challenges increasingly flagged as another potential source of relief in the coming weeks. In addition, continue to talk about potential for an extended bounce with the help from positioning and flow dynamics, particularly in terms of systematic releveraging and corporate buybacks. However, still concerns about volatility and sometimes competing goals of Trump's trade strategy, the logistical complications facing a flurry of trade deals and still elevated effective tariff rates outside of trade, fiscal policy, the other big area of focus, with Republicans set to begin their reconciliation bill markups and lingering divisions over the usual suspects. April core CPI, 0.2, a bit cooler than consensus, and 0.3, while annual core of 2.8 is in line. Lowest year-over-year increase since February of 21. Shelter cost of 0.3 accounted for half of the gains, and auto insurance accelerated while airline fares, used vehicles contracted, though shallower negative territory versus March. However, release details mostly in line with expectations for fairly minimal tariff impact on April data. Following the release, policy-sensitive 2-year yields extended the rally, adding more support for earlier Fed rate cuts. Market pricing in firm for the first cut in September, though expectations still for 2 cuts through the year end. Small business optimism below long-term average for the second straight month in April. No data on Wednesday, though Fed Waller, Jefferson, and Dolly scheduled to speak. Thursday brings Empire Manufacturing, Philly Fed Manufacturing, retail sales, PPI, industrial production, and business inventory. In addition, Fed Chair Powell. And then Friday, University of Michigan consumer sentiment. Not much in terms of corporate news. Amazon reportedly reached a deal with FedEx to use it as a third-party delivery provider. UNH CEO Andrew Whitney stepping down for personal reasons and company suspending guidance on higher medical expenditures. China has reportedly resumed acceptance of Boeing deliveries. AT&T reiterated 25 guide ahead of conference appearance, noting wireless market remains healthy and competitive. SE helped by big margin-driven EBITDA beat. SPG headline FFO light, though real estate FFO above, while company reaffirmed full-year real estate FFO guidance. JD beat and talked up strong user growth. TME quarter 1 revenue and EPS a bit better. ONON beat and raised full year guide. DVA EPS light with some focus on softer volumes chalked up to severe flu season and weather. Powie results guide largely in line with company noted steady order trends and announced 50 million buyback. MODG Q1 better, while company updated full year guide from tariffs, FX, and Topgolf, and reiterated plans to pursue business separation. Wow. Chadadonia. Are you kidding me, Habibi? Powie, P-O-W-I is the stop. Powie. Is it Powie or Powell? I don't know, Habibi. I just read it. I read on the screen, you know. Wow. There is a more, Habibi. There is a more. So SE, they're up by 12.3 off earnings. Coinbase is up by 10.1, being added to the S&P. First Solar is up by 7, Wolf Research upgrade. ONON is up by 4.6 off earnings. JD 4.5 off earnings. Phillips up 2. ISS recommends Phillips vote for all 4 board candidates. Hood is up 1.8. MSTR up 1.8. FedEx up 1.7. Follow through on Amazon deal. AR is up by 1.5. Mizuho upgrade. Boeing up 1.5. China removes bans on airlines taking deliveries. TME is up by 1.2 off earnings. SPG 0.3. ARWR is up by 8.1 off earnings. HUT up 3.5 follow through. LOAR up 4 off earnings. Lunar up 3.4 off earnings. GRAL up 2.8 new partnership with Athena Health. Payo up 2.4 Keefe Brewett Woods upgrade. UAAA is up by 2.4 off earnings. CYTK 2.1 Cantor overweight. SMR 2.1 off earnings. Peloton 2.1 Macquarie upgrade. LC up 59 new home to acquire land and sea for $11.30 a share. IHD up 51 off nothing. Backed up 18.9 off earnings. GCT is up 11 off earnings. MLGO is up 10.5. Develops blockchain traceable IP right protection algorithm. GRYP is up by 9.9. Follow through with a merger. MVST is up by 8.8. EVTL up 7.3. RGNX 6.6 off earnings. Perry 6.5 off earnings. YMAB up 3.3 off earnings. Saddle up 2.9 customer agreement. Wolf up 2.1. Lenders reportedly extend rescue financing proposal to avoid bankruptcy. Financial Times. UNH down 9.1. Suspends 25 outlook as medical expenditure expenditures higher than expected. CEO steps down for personal reasons. VG down 6 off earnings. HMC down 4 off earnings. Cyber down 3.2 off earnings. Honeywell down 1.1. DVA down 1.0 off earnings. Rigetti down 11 off earnings. ODD down 9, 5 million block share with CEO Orrin Holtzman. Hertz down 8.5 off earnings. RPD down 7.5 off earnings. IGT 7.5 off earnings. Enphase down 4.5 downgrade at Barclays, BMO, and BNB Paribas. ASTS down 3 off earnings. SGMO down 36 earnings and 12 million offering. Coherus down 18 off earnings. And Indy down on earnings. And then these guys. Wow. There you go. Not bad. Not bad, my friends. Oh, yeah. So, yeah, I do think, though, today, very simple. China, K-Web, and Bitcoin. I don't think you have to make today too difficult. Chips, China, and then Boeing, and then, yeah, Bitcoin. So that's all I'm going to be watching. There was one on there, actually, that I wanted to see. Oh, yeah, we got so much time, you guys. This is crazy. It's crazy. Where was it? I think MLGO. I hate them, but I like that algorithm. But, yeah, either way, I'd rather focus on the bigger one. So I'm going to be watching Boeing, K-Web, MSTR, iBit, MLGO, and then keep an eye out on the dollar and gold. Yeah, there is an Airbnb announcement. I tweeted at the CEO. I told him if he pulls some Evan Spiegel shit, we're going to have problems. Okay? I didn't threaten him. I swear, it's not a threat. I'm just saying I'm not going to be friends with him anymore. Okay? I like the other Republican who left the company. You know, only the Republican, Mr. Gabia, he left the company. And now we stuck with Brian. And Brian, if you pull a Evan Spiegel with that stock-based comp, I know you making $2 billion a quarter, dog. Let me see some of it. Let me get a little bit of that, bro. Why you gotta pay it with shares, bro? You want to send him a message in an Uncle Matt? We're both going to jail if you do that. Okay? I just hope you know. That's it. After the tweet, bro, and then you show up in an uncle mask, we're both going to jail, bro. I don't know why. I don't even know if that's a crime, but we still going to jail. They going to be like, they're like, you showed up in a puppet mask? Because it looks scary, bro. I would be terrified. Bro, I would be scared if I woke up one day. If I saw somebody sitting in front of my house with an uncle mask, oh, I would repent. I would repent so fast. I see it. You gonna turn Brian Chesky to a Republican if you did that. You know that? He gonna wait like, nah, never mind. That's it. You gonna stop even talking like that. He gonna have a deeper voice all of a sudden. He's like, never mind. You're right, Josh. Never mind. Airbnb. He gonna have a deep voice all of a sudden. You're like, what? I didn't know. He's like, yeah, this whole time I could have done it. Trump signs economic partnership between U.S. and Saudi Arabia. Yes, sir. Crown witness signing of agreements. So, yeah, that is happening right now. But other than that, Chad Adonia, other than that, we have a lot of time. We have went over the plays. And now I think we need to talk about real life. Yes, sir. I'm excited, man. And I love it. And I'm happy Tuesday, baby. And here at the Cult, man, it's amazing, you guys. Don't you think it's amazing? I really am, bro. The more and more I think about it, I'm glad. And I hope you guys learn something. For real, bro. For real. Your voice can make a change. All of us together, when we align with our interests and support certain things, bro, we could change the world. Do you know that, Chad? I don't know if you feel me. I don't know if it sounds silly to you or not, but we can change the world. And I say this because every day, bro, we need to honor the veterans more. And we've already watched people take steps. We've started to be a lot more annoying about it, and I'm glad. So every day, bro, veterans, thank you. For real, bro. And that's why it's not about little things here and there. It's just for real, bro. We've always felt this way, and we've done it for years, and I truly hope that as a culture, man, if we could develop anything, if we could grow into a good culture, I hope it is one that honors the people that have given everything. Again, whether you are American or not, I think it's special for Americans, and it really is in this country, but everybody who has served for their nation, bro, it is an honorable thing. But above all else, this country and what people fought for and what they stand for and the way I have the freedom, again, my friends, People died for our freedoms. So, you know, if you weren't out there serving, you weren't out there fighting, you weren't out there leaving your family, then you should use the freedom that you have to support those who supported you. And that's why every morning, man, we need to honor our veterans. And I truly hope you guys bring this into real life. So veterans, active service, past service, anybody who has served, even the families, for real, man, thank you for everything. And if anybody should be getting a long-term in a house, please follow the rules. Let us help, man. If anybody should be getting anything, we are already in your debt. So veterans, God bless you all. And if you haven't served, bro, for real, bring this into real life and you can make a change. And you'd be surprised, bro. You would be surprised. And big shout out to anybody else out there giving back to their local communities. Doctors, nurses, teachers, firefighters, police officers, the janitors, the coaches, the garbage men, anybody making their community run. God bless you and thank you, baby. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Son of the Jets! Oh, it's game time, baby. Or nah, let's go. Ho ho ho. Chadadonia. Let's go, baby. Are you kidding me? I think you do have Trump live. Hexeth to sign MOU. Saudi sign energy, defense, and mining agreements. So yeah, that's coming out now. Well, Chadadonia, let's get the day started. It's going to be a fun one. You had low CPI, nobody cares, or practically break even, and now we play the trade data and everything else in between. So let me get Donald Trump up here. He's still live, so we might get some headlines, but we're already early. We might as well move on over to Gen Pop. So I'll have the Trump live on the Gen Pop. You know what I'm saying? So let's get it, baby. Are you ready? Oh, wow, they're already waiting. They're already waiting. So, Chad, God bless you all, man, and thank you guys for everything, and have a good day. For real, bro. Remember, I'm telling you right now, am I killing it? I am. I'm doing amazing. You know how? I don't give a shit. Again, all these people stressing and getting in their heads are making a hard situation even harder. So, my brother, take heart, okay? I hope you start off this morning at peace. I hope you keep your peace, and I hope you control your emotions. And those of you who do, that is the real prize, and I'm sure it will lead to success, okay? So take heart, my friends. It's game time. It's game time. So, yeah, baby, I'll see you guys at Gen Pop. Let's have a great, great Tuesday. Finger to the sky. And I'll see you guys in a little bit, baby. Peace. Tim.